All right, joining us for more on this is Charles Myers, chairman and founder of Signum Global. Thanks for joining us today.
Thanks for having me.
Are you surprised by the public statement made by Powell? Usually he likes to stay out of the spotlight. And if you are surprised, what does it tell you that he felt compelled to make an announcement like that?
Yeah, it is. It's an extraordinary move or, statement from the Fed chair to put a video out to rebut, kind of not only the allegations, but the process. And so I think, it just highlights how much pressure the Fed is under from the administration, from the president, and how willing the chair certainly, and I would argue most of the FOMC is to fight back or to stand their ground and remain independent. So I think that every investor in the world sees through this and understands that it's politically motivated. And I think that even the administration's backed off a little bit in the last 24 hours. So, and lastly, I would just say that, if anything, it probably strengthens Chair Powell's resolve to stay on the FOMC after his chair term ends in May. I think he stays on as a voting member of the FOMC now till 2028.
Okay, and if he does do that, how do things change as far as the math goes behind the scenes?
Well, I think, in the end, if you look at the number of potential appointees that the president can make between now and the end of his term, it'll still be a minority of voters on the FOMC. So I think that with Chair Powell staying, it's even, a slightly, even smaller minority that the president has. But de facto, just in terms of monetary policy going forward, to say that from May onward, when the new Fed chair is installed, it will be an FOMC that by composition is a little more dovish. I think still very independent, which is important for the markets and the safe haven status of the United States, but probably on balance, a little more dovish.
Okay, let's talk about the criminal case for a moment. I'm wondering if you think it'll get very far. You've seen and noted a retreat already in some of the rhetoric. Donald Trump, for example, isn't commenting on it. And we've seen some of these other, quote unquote, revenge kinds of cases stall, like the one against James Comey.
Yeah, this one I think absolutely stalls. I think it'll be a very long investigation. Ultimately, of all the things to try to pin on the Fed chair, cost overruns for a building renovation is not a particularly serious one. So I think it'll be a long-running investigation that leads nowhere. All
right. What is the risk of political directives in monetary policy?
Well, I think, the president, since he came back into office a year ago, has consistently put pressure on the Fed very publicly to try to, lower interest rates faster. I'm not sure that the pressure campaign is working. I think the Fed takes every member of the FOMC, every voting member takes their role very seriously as the independent monetary authority of the United States. And I think it just keeps their head down, including the chair, and does their job. I think they're data dependent, they're independent, and they will continue to follow the data.
I do want to ask you about Venezuela as well, because you see investment opportunity there and have seen that for some time, though, as you know, there are many who say there are too many challenges, particularly in the oil industry, around infrastructure and laws to try and make it work. What are your thoughts on investing in Venezuela and what that looks like?
So we're very excited. I'm very excited about the outlook for Venezuela, particularly for foreign investment. Now that the United States has removed Maduro, the United States now has a huge vested interest in the economic success of Venezuela. Central to that success is foreign investment. And I think oil and gas gets, rightly so, all the attention because that's the priority. But there are huge investment opportunities in construction, in infrastructure, in mining, steel, banks, insurance, even in the defaulted sovereign bonds, PDVSA bonds. So we're taking investors down to Caracas late March, about 20 to 25 investors, to do some due diligence and look at reconstruction opportunities. Lastly, this is a country that is emerging from 25 years of dictatorship and economic mismanagement. It's going to take some time, but I think it's a good time to get down there early and kick the tires and do some due diligence.
What are the one or two things that have to happen before you can really reinvest into Venezuela?
So I think, a couple of the U.S. CEOs have been pretty articulate on this. First, we need to make sure that the current government, because there's only been a change of leadership at the top, as you know, but that the current government is stable and is going to last. Secondly, that this government can maintain domestic security so that companies feel comfortable going down, visiting, and looking at investment opportunities. Third, changes to some of the legal structures, especially around foreign investment, change to the hydrocarbon law, for example, for oil and gas companies. And lastly, we need sanctions to be lifted, which the Trump administration is working on as we speak.
All right. Charles Myers, thanks for joining us. Appreciate you joining us on The Close today. Thank you.